Hey everyone, welcome back to Corporate Decoder, where we take complex corporate documents and break them down so you can understand what is really going on. Today, we're diving into a report from Via Transportation Incorporated. And let's just say their latest financial announcement might have a few surprises for us before we jump into the nitty-gritty. If you love getting insider knowledge from these SEC filings, do us a favor and hit that subscribe button. And hey, we've built a buzzing community over on Discord to discuss all things corporate finance. So if you want to join the conversation, click the link in the description below. So Via Transportation Incorporated, you might know them as Via, a company operating in the transportation technology space. They've just released their financial results for the quarter ending the 30th of September 2025. And we're here to decode what these numbers actually mean for the company's health and its future direction. These reports are dressed up in corporate jargon, but our job is to cut through the noise and find the real story. This filing is what we call a Form 8, which is a report that companies must file with the US Securities and Exchange Commission, or SEC, to announce major events that shareholders should know about. In this case, the big event is the release of their quarterly financial results. It is like a regular checkup that a company has to give to its investors, telling them how it has been doing. A quick look at their stock itself tells us they are listed on the New York Stock Exchange under the ticker symbol VIA. This means their stock is publicly traded, and these reports are crucial for anyone considering investing in or already holding their shares. The report we're looking at is dated the 13th of November 2025. This is important because it tells us the most recent financial snapshot we have for Via Transportation Incorporated. We're specifically interested in the period leading up to the 30th of September of that year. Now, the core of this filing is a press release announcing their financial results. While the full details of the numbers might be embedded within the press release as an exhibit, the filing itself tells us that they've put out a statement about their performance. This is typically where the company highlights its wins and tries to put a positive spin on things, but we'll be looking for the underlying performance data to see if it matches the narrative. Unfortunately, this particular Form 8K filing is quite brief and primarily serves to announce the release of their financial results via a press release, which is included as an exhibit. It doesn't contain the detailed financial tables within the main body of the 8K itself that we often spend a lot of time dissecting in other filings like a 10Q or 10. That said, the filing does tell us the date of the report and incorporates the press release by reference, which is where the real financial meat would be. Usually when we get a filing like this, we'd be digging deep into metrics like revenue growth, profitability, expenses, and cash flow. We'd be looking to see if their revenue from the previous financial quarter or the same quarter last year has gone up or down. And by how much, for example, if we saw a 10% drop in revenue compared to the previous year, we'd be asking why? Did they lose customers? Did their pricing strategy falter? Or is the market itself contracting? We'd also scrutinize their net income, which is essentially their profit after all expenses. A rising net income is generally a good sign, indicating the company is becoming more efficient or generating more revenue relative to its costs. We'd also pay close attention to their operational expenses. Companies can improve their profitability not just by selling more, but by cutting costs. So we'd examine if they have managed to reduce their cost of goods sold, their selling, general, and administrative expenses, or their research and development spending. Sometimes cutting R&D can be a red flag, suggesting they might be sacrificing future growth for short-term gains. Cash flow is another critical area. A company can report profits, but if it is not generating enough cash, it can still run into trouble. We look at operating cash flow to see how much cash the business is generating from its core operations. Positive and growing operating cash flow is a strong indicator of a healthy business. Given that this filing is primarily a placeholder to incorporate an external press release, the real analysis of Via Transportation Incorporated's financial health for the quarter ended the 30th of September 2025 would be found within that press release itself, referenced as Exhibit 99.1. Without access to that exhibit, we can only infer that the company announced its financial results, and this 8K filing is the official notification to the market. However, based on the typical reporting standards for a company like Via Transportation Incorporated, we would expect to see information regarding their top-line revenue, their profitability margins, and potentially any significant changes in their balance sheet or cash flow statements that would indicate shifts in their financial condition. For a company in the tech-driven transportation sector, key aspects to watch would be user growth, engagement metrics, expansion into new markets, and the competitive landscape. Are they gaining market share against competitors, or are they facing increasing pressure from new entrants or established players? The fact that Via Transportation Inc. is noted as an emerging growth company is also significant. This designation often means they have some regulatory flexibility, which can impact how quickly they adopt new accounting standards. For investors, It is good to be aware of any such special provisions that might affect the comparability of their financial statements over time or against their peers. This can sometimes mean that their financial reporting might not be as detailed or as standardized as that of larger, more established companies. Finally, the report is signed by Daniel Ramit, the Chief Executive Officer. This signifies that the leadership of the company has reviewed and approved the information being reported. As CEO, his signature carries weight, indicating his endorsement of the company's performance and disclosures. So, what is the takeaway here for us? This filing itself is more of an announcement that financial results are available, rather than a deep dive into those numbers. The real story, the crucial financial details about Via Transportation Incorporated's performance for the quarter ending the 30th of September 2025, are contained within that press release, Exhibit 99.1. If you are looking for a detailed analysis of their financials, you'd need to get your hands on that press release. From what we see here, the company is keeping the market updated about its financial standing, which is a fundamental requirement of being publicly traded. The key will be to see if the actual numbers in the press release tell a story of growth and strength, or if they reveal challenges that the company might be trying to downplay. What are your thoughts on this type of filing? Do you think it provides enough clarity for investors, or is it just a formality? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate insights. And don't forget to join our Discord community for more in-depth discussions. Thanks for watching, and we'll see you in the next one.